Welcome to This Note. Consider this your global masterclass on the 24/5 digital economy. Today, we're unpacking the absolute mechanics of the world's largest financial market, the global foreign exchange, or Forex market. Whether you're here to learn the ropes, build some cutting-edge tech, or maybe find your next lucrative freelance niche, understanding exactly how global money flows is, well, it's an absolutely foundational skill. So let's get right into it. Okay, we need to start with this truly mind-blowing number, $9.6 trillion. Now, you might be thinking, that's a yearly figure. Actually, scratch that. That is the average turnover every single day. Let that sink in for a second. We're talking about a daily ecosystem that represents massive career, business, and monetization opportunities for anyone who truly understands how the gears turn behind the scenes. So here's our game plan for this mentorship session. We're going to literally track the sun across 5 major hubs to see how all this liquidity flows. We'll kick off with the global money relay, watch Sydney and Tokyo wake up, check out Singapore's amazing tech innovations, visit London as the undisputed king of volume, hit that explosive New York overlap, and finally, the best part, we'll break down exactly how you can monetize this new knowledge. All right, Section 1, the global money relay and the 24/5 digital economy. Here is a totally critical concept you've got to grasp right off the bat. Forex doesn't have a centralized exchange like the New York Stock Exchange. It's completely decentralized. Think of it like a giant global relay race where capital is handed off like a baton across the planet. The market lives continuously in the overlapping working hours of these global megacities. It starts down at 10 p.m. GMT in Sydney, moves over to Tokyo at midnight, sweeps across to London at 8 a.m., and finally hits New York at 1 p.m. And this perfectly captures the reality of modern finance. The sun literally never sets on the digital economy. No matter where you are sitting right now, there is a major financial center wide awake and processing capital. That is the magic of a 24/5 market. Moving on to Section 2, Sydney and Tokyo awaken. Let's look at the Asia-Pacific Open. So the global trading week basically begins down under. Sydney acts as our early bird scout. And because of how Australia's economy is built, this session is heavily focused on the Australian dollar and big commodity data. A couple of hours later, Tokyo steps into the ring. Tokyo is a heavy-hitting financial powerhouse and a well-known safe haven. To put it into perspective, Japan's local market alone clears over $462 billion daily. And the US dollar to Japanese yen pair, that accounts for roughly 63% of their local spot turnover. During these early hours, the Asian session is handling a solid 20% of the entire globe's volume. Because it's the first out of the gate, the Sydney session plays a huge role in setting the early market sentiment. Early-stage traders, and definitely those lightning-fast automated systems, watch this window incredibly closely. They're trying to gauge the market's reaction to weekend news events way before the Western financial hubs even turn their lights on. Which brings us to Section 3, Singapore, the tech innovator. Singapore realized early on that they needed a serious competitive edge, and they found it in pure technology. They went all in on EFX matching. Basically, these are electronic foreign exchange trading hubs designed to match orders locally. Why is that a game changer? Well, in a digital economy, speed is literally everything. By matching orders right there in Asia, they drastically reduce latency. That tiny, frustrating time lag between placing an order and actually getting it executed. Their growth strategy is an absolute masterclass in digital transformation. They released an industry transformation map and backed it up with serious government grants to build out these e-trading ecosystems. And it worked perfectly. They attracted massive market makers and hedge funds who desperately wanted that low-latency execution. The result? They're now capturing a massive $1.5 trillion in daily turnover. Incredible, right? All right, Section 4, London, the undisputed king and the global liquidity anchor. Now, when most people think of global high finance, they immediately picture Wall Street, but the numbers tell a different story. London clears an eye-watering $4.7 trillion a day. That is nearly twice the daily volume of the entire United States, which sits at $2.3 trillion. Wall Street gets the movies, but London moves the money. So how exactly does London dominate with a 38% slice of the global pie? It basically boils down to geography, infrastructure, and trust. London's time zone makes it the ultimate bridge. Its morning overlaps perfectly with the end of the Asian session, and its afternoon overlaps with the start of the North American session. That position lets it set the benchmark prices. Combine that insane geographical advantage with a highly trusted, FCA-regulated environment and unmatched institutional infrastructure, and you get liquidity pools that are just incredibly deep. Section 5, New York and the overlap. Welcome to the golden hours. When New York finally comes online, the whole market just transforms. Get this, over 70% of all daily active trading volume occurs during a very specific 4-hour window when London and New York are open at the exact same time. To really understand this, we have to compare the quiet hours to the golden hours. Quiet hours, they have lower liquidity, smaller price movements. It's mostly range-bound stuff. But the golden hours, running from 1 p.m. to 5 p.m. GMT, that is when the magic happens. Think of it like a shift change at a massive global factory, but instead of one shift leaving while the other arrives, both shifts are on the factory floor working simultaneously. This literally doubles the firepower, giving you peak liquidity, incredibly tight spreads, and those major institutional breakouts everybody is looking for. The volume spikes so violently right at that overlap. You've got this massive influx of major U.S. economic data hitting the wire, colliding head-on with that deep European liquidity. For anyone out there looking to build a trading strategy, test a financial algorithm, or launch a fintech product, this is the absolute perfect window for capturing clean, fast market moves.
Finally, Section 6. It is time to monetize your new knowledge. Let's apply these global insights.
So, how do we take all this and actually use it? Whether you're a freelance developer, a SaaS startup founder, or an aspiring trader, you need a solid workflow. Step 1, target the nylon. That's New York and London overlap. Step 2, deploy your AI and automation precisely during those highly liquid hours. And step 3, use that structured approach to aggressively scale your digital income.
Let's talk about real-world, future-ready applications here. You could build AI scripts specifically designed to wake up and trigger only during that explosive 1 p.m. GMT overlap. If you're a coder, you could freelance by building latency-reducing tools targeting that booming Singapore EFX ecosystem we talked about. You can manage risk by building strict time zone-based trading plans that keep you entirely out of the unpredictable quiet hours. Or, hey, you could create automated side hustles totally focused on capturing USD JPY breakouts during the Tokyo session. The possibilities are huge. By aligning your tech, your custom algorithms, and your business ideas with these very specific geographic windows, you are giving yourself a massive structural edge. So I want to leave you with this final thought to chew on. Which time zone will build your digital wealth? The opportunity is out there processing capital 24 hours a day, 5 days a week. Thank you so much for joining this masterclass. Now go out there and start building.